The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at 877-927-6648. My service is the opening call, a very comprehensive daily newsletter. Spent a lot of time over the last 2 weeks, but especially over the weekend. Did a whole litany on what we're looking at in the market. Wow, it looked like I might be wrong until this very moment. We'll go through it. Thank you to the great hosts we had earlier on, and hopefully you'll be listening all day to keep going. Straight after my show, you've got your swim lesson. You've got 1 o'clock. Steve Rhodes, always forget 1 o'clock is Steve Rhodes. And then 2 o'clock is Dave White. Of course, Tom O'Brien's back 3 to 5. So let's just get right to the nitty-gritties here. I'll run the tables, and then I'm going to do, since it's Monday, the beginning of the week, and then I'll do the nitty-gritties. The Dow's up 42 at 17,690. Let me do it with the charts. It's even better. I'll get back to that S&P chart. There's some very interesting things going on. So the Dow this morning went to 17,731, and now it's only up 100 points lower than it was. It's up 45. And I'll explain to you what I'm looking at in a moment. But let me just say, see the stashed trend line right there? So far, it's failed to cross. And what is the line? Closing above 17,700 would be pretty impressive as far as I'm concerned. The W formation, I went through a whole bunch of chart patterns over the weekend. Let me move this 120-minute chart out here. It made a PD before. It went to a leg B today and slipping back. So there are a whole bunch of patterns here. I think I'm going to get rid of these because they were there just for demonstration purposes. I'll keep them on for now. The weekly chart made that W formation. The W formation went above the downtrend line, closed above it 3 weeks ago. That was the week of the 1st of April. Last week made a lower high, so it's already made a peak, 17,811.48. Last week was 17,806.38. So we've got what I call a gray peak B. Why is it a gray peak B? Because letters that are going to the buy mode invariably get the blue letters with uppercase on the upside, lowercase on the downside. And this is what I call a retracement failure mode. It's an explanatory thing. It is not saying that you have to fail. It says this is a retracement, and that retracement can fail at any point until it breaks to a new high, and that would be above 18,351. That was the high of last year in May. So this trend line is going to be really important. If on a weekly basis there's a close below 17,500, not a big deal, 130 points from here, that would suggest that we've started a pullback which could test the 17,333 level on the 9-period moving average in the weekly chart. All right, let's keep going. On the upside, as I say, a break into the 17,000, certainly break into the 17,750s would be really impressive. Yes, you could make a U formation going back to the top of this last move at 17,811, but this is what we're dealing with right now. Very, very poor technicals, which is the reason why on Friday there was that failure after a very strong 160-something point move up, pulled back sharply, and today we've repeated. Now, I wasn't expecting that there would be a repeat of such a big move to the upside, but I was expecting there to be a failure. I'll show you the pattern in a moment. Let's go on. SPX.X, this is the S&P, trading at 2,053, up 5.5, made a peak D-top, and I've got down arrows in both the Dow and the S&P because they closed under the 9-period moving average, the S&P for the second time last week, and the MACD and stochastic are very poor. So moving higher is really going against the grain, and I'm not expecting that could last, but we'll see. Parameters, the close above 2,067, 2,068, 15 points higher would be very impressive and say, yep, you're going to retest the previous high of 2075.07. Meantime, in the weekly chart, you've made your peak A. I should call that a gray A. Let me make it gray. And the monthly chart in both the Dow and the S&P, well, we've just begun the month. I'll talk about that in a little while. Let's just get to this short to intermediate term that we're looking at right now. The QQQ series, 109.48, up 48 cents, made a peak alternate count FND. And that says, yep, you should be pulling back sharply. Well, the rally so far has failed from the highs, but it's still plus. And that says parameters to watch are a close above 110.30 is impressive. A close below anytime this week below 108.50, not impressive. Says that be careful because you're going to test the 107.42 9-period moving average in the weekly chart. Monthly is still good. As I say, monthly has just begun. IWM right now did the same thing, pop and drop. We'll see if that holds, but in the meantime, you've made a peak E. You've got a down arrow here as well in the Russell 2000. And that says that the resistance at 111 in the 111s is very strong. Just beware that at 109.49, up 37 cents, if it closes below the close of Friday, which was 108.63, that's very negative action. And it is a peak. It'll be a peak B if there is no push above 111.32 this week. All right. And the monthly chart is not very good. I'll just quickly do the NYA, but I don't want to run out of time in this segment. So let me see. Whoa, I didn't even put the time up. So in this segment, we've got a peak G, unusual in the New York Stock Exchange, also pulling back but holding above the 9-period moving average and the 200-period moving average in the daily. In the daily. I would put in right here, I'd put in this oval pattern just to show you that these are the parameters to watch and that it would take a spike into the 10,300s. And it's at 10,160 right now, up 40 points. So that you got to watch. And as far as I'm concerned, it's one of the weaker indices, just like the IWM. Now we get to gold. Gold is up $15 at this point. It's also pulled back a little bit from the intraday move. Hey, it's the same thing. Oh, the reason why it's the same as the New York Stock Exchange is because it was the stock exchange. I didn't move. There we are. Very strong, up $15.10 at 1258.90. Strong leg C. And the more work I did over the weekend, the more impressed I was with gold and even silver. And I think that that's telling us a story. We'll get into the story in a moment. Just let me quickly go through this. The 200-period moving average at 1268 is very important. You made a peak D in the weekly chart. You held the 9-period moving average, the GLD. I also did GLD. This is the gold index. It's the gold the spider. Held the 9-period moving average. Is trying to get back to 121.09. The 200-period moving average, it's at 1259 right now, up. Why did I do that? It's because it didn't update. Oh, I unclicked that by mistake. There you go. Okay, 120.17 is up $1.74. And this is a new leg C in the daily, but it's a gray C. Now, let me just do this real quickly. I was asked about it. I'll get to that. The XA, you know what? I'm not going to rush into it. I want you to spend a little time on some of the indices that are involved in the gold, the XAU, the HUI, the GLD, the GDX, etc. So I'll be back. Let me just say that crude oil, look at this pattern. Crude oil is up 52 cents. Look at this pattern as we go out. There it is. There's the SPY in green, and there is the crude oil in red. 5-minute chart.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, just to show the 10-minute trial, I thought I was going to do that every day when I began the show, and I'm not even sure if I did it because there's just so much going on. The E-mini went from 2032 at about 3:30 this morning, just started a huge move to the upside, made a beautiful arch formation, had the resistance at the 200 moving average, that orange line. It was more like coral colored. And then it screamed up to a peak A, pulled back and went to a B, and then it pulled back and started a new inside buy mode. They went to peak A, B, C, D, and even an E at 2056.50. And then it went all the way down to the most recent low, right at the 200-period moving average at 2043.75. This becomes a really important moment. Just one quick thing. Emails. Al. Okay, Al likes to grab the different indices at almost the exact top of the bottom. Al says, hope you covered all shorts pre-market. Why? Monday we should have been down huge. This market is going higher. No shorts. Well, unfortunately, we don't all see it that way, Al. I still have the shorts. We did get stopped out by the penny. They took us out by a penny. But we've got other shorts which seem to be working very well. Our volatility short is acting well. Day is young. Anything can happen. I'll go through some of what maybe Al would be looking at in a moment. Just let me quickly say the TLT is down 15 cents at 131.87. My contention is that if the let me just move this away. If the bonds start to move higher and the TLT gets back to the 132.50 area in the next day or two, that could become the drag on the market to pull it down. So now let me go through these different things. The weekly chart on the TLT, as well as in bonds, really suggests, just visually, trade what you see. Larry likes to say, the way I'm seeing it, the TLT, the 20-year iShare Treasury Bond ETF, is holding the 9-period moving average once since it broke out to the upside back on the week of the 8th of January, has it closed under the 9 EMA. So the Japanization of our bond yields, I think, is actually still in play. We'll see, because if it breaks under, well, certainly if it breaks under 127.21, that's a very big negative. But all it has to do is close under 129. Not a big deal. 2 points lower, 2.5 points. That'll be a big deal for the chart pattern. I'm saying not a big deal because so far It hasn't even gone close to the 9-period moving average of 129.97. So that says that if bonds start to, the TLT starts to move to the 133.39 level, you can expect that there's a good chance we'll make that leg D above 135.25. Those are the parameters I'm looking at, just so that you can be clear what is it I'm looking at. Now, I want you to do this. There are a couple of things that are important right now. Because of the strength in gold, we have to look at the dollar, and then I'm going to go to those different funds, etc., in the gold area. So look at the dollar, GXY. Remember, we spoke about this before in the Chapman wave, the arch formation or the inverted V, closing below the left side low. You have that bar or the very next bar to get right back in, to be able to bounce. If you don't do it, you've got to wait for a brand new buy signal, and you just keep going down. So this now is what is it? G/C on the way trough. No, leg down, G/C. No sign yet of any strength. But we are getting into the left side low that is important. That's the low of 93.81. And so far, we've gone to 93.75. We've taken it out. Does this bar on the weekly basis close above that level or not? If it doesn't, for 2 weeks, you're going straight down to that 92.62 level, the low of the 28th of August. Okay, and you've got yourself a very decisive arch formation here. And you've got yourself an inverted V here. So that's the dollar. That's why do I spend a little time on the dollar? Because the dollar is saying it allows for crude oil to rally. And if the dollar is getting close to some kind of support, as I said, on that left side, then you've got to wonder whether or not there's enough energy for crude oil to take out the recent high at peak F right there on the 18th of March at 42.49, or whether this is just a bounce and we're going to invert. At this point, it is showing strength. The technicals are trying to rally strongly. This is early in the day, but we'll see whether the MACD is going to cross positive and the stochastic is going to continue pushing higher. But I like the fact that the stochastic in the weekly is flat. I don't like that it's at 69%. If it was flattening out at 85%, I'd say, you know what? Crude oil is not coming down. It is just going to go higher and higher. Right now, I have to still consider that you've got that arch that can go to an M formation in crude oil. Now, let's go to what I wanted to do. XAU. All right, here we've got the XAU breaking out. This is new leg E/C. Fabulous action. It's gone above. Wow, what a big move. It's gone above the 77.06 high that was made at a peak D. Very quick ABCD. Going to the week of the 15th of May of last year, 77.06. We're already at 78.08. Very good breakout, and it's in a shorter price time match than you would expect. So, and that's very good, and it's helping the monthly chart. So that's the XAU. The support right now is between 72.02 is the 9-period moving average, but really you have to look at the high that was made at 73.81. And this is called the Chapman wave. Cup and ladle breakout, and once you break out, I'm going to have to call this a C. You're liable to go to at least a D. Then the major support is that high that was made at 73.81. Do the HUI quickly, and then we'll take calls. HUI. The HUI also is breaking out. I have to call this brand new leg C more than a G/C. And you look at this in the weekly chart. This is really something. This is the Arca Gold Bugs Index. The other one was the Philadelphia Gold and Silver Index. This is very strong action. And you've taken out the left side, right side price time match from within a month, 1 month early in the monthly chart. And that says that the target should be 211.23 in this week. The upside, very nice action. And the GDX, I can't believe we got stopped out of our GDX. And then bam, it goes to the upside, is in a brand new leg, F/B. And there again, I'll probably have to have no choice but to call it a B. No, wait a minute, A, B, C. Sorry, C/B, because that would be the beginnings of the new buy mode. So GDX has a support at 21.42. It's at 22.50 right now, up 107. And one quick thing that I want to look at was GDX, silver. SI, silver's acting really well. What a beautiful move. Brand new leg B, gray B in the daily, and it looks to me like it wants to go to leg D in the weekly by going over 15.20 the high of the week of the 18th of March. Hope I've covered that in much greater detail. And let's go to Scott in Safety Harbor. Scott, how are you?
Great, Basil. This weather down here is just fantastic. You know, I think the headlines in Yahoo today say it all about how the market is just so schizophrenic. It says Wall Street rallies on expecting of grim forecast for earnings.
Oh, isn't that interesting? Yeah, you know what? I'm looking at the chart, and I'm going to go through it in a moment. The stock that you want to talk about is really a very good example of what's going on here. You want to look at Alcoa, right?
Yes, sir.
Trading at $9.70, up 32, and it's really making, and I would call it a symmetric triangle pattern, a flag pattern. So it's really worth talking about, and it actually fits nicely into the market as we see it right now. I'll be right back with Scott and Safety.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and as we're coming back, as well, show the E-mini up 625. It's making this pattern. Yeah, it should make an arch formation, hit resistance roundabout if it does bounce between 2048 and 2049. If it gets to 251, that's something else, and that's that. And the NQ, I just wanted to show that, and we're going right back to Scott and Safety Harbor. NQ has also had made an inverted V formation. Got to watch that real closely if it starts to fail. Now we're going to go to Scott. So, Scott, what we've got is from the high that was made, and remember what we were discussing last time we spoke about this, I said there's a measured move in time that went from the last peak F top in Alcoa, that was round about on the 7th of October at 11:18, to the high that was made at the peak E top at 10.27 on the 29th of December. Then I said, if you take that high and you go to the high that was made on the 18th of March, it's almost exactly the same in the number of bars, and we should have some kind of a pullback. Well, we've got that pullback, and if you look, it's like a little miniature a consolidation of what you saw when you came back down from the October the 8th high. Now what's interesting is there's another little pattern, and that pattern says that Alcoa, now, before I go even another minute further, I have to say, Scott, do you know when earnings are coming out for Alcoa?
This afternoon, and I feel so sorry for novice investors. Someone just called me a few minutes ago and said, well, I read an article, but it says they predicted an 8% move, but the article said in either direction. Oh, that tells you a lot.
That's only 16, right?
And not only that, but then what I just other headlines of Wall Street rallying on expected dim earnings reports in the next couple of months. It's so confusing to a novice investor that if it says white, it's actually black, and vice versa.
You have to think
crazy.
Opposite. Now, let me just ask you a quick question before we get anything else. Do you have a trade and you've taken it off already, or are you still in it?
No, I'm in there. I'm pretty deep into it right now, in a 950 and a 920.
So, are you going to stay through earnings or not?
Well, that's why I'm calling Basil because I have full confidence that it will pull out and become an $11 stock again within the next month and a half. But if I can buy it cheaper later today and
let's just do this. First of all, I've learned over the last many years. I used to do it. I used to even put on trades, and the number of times they hit, and I made money, and the number of times I missed and I lost money, I decided that it just really wasn't even worth. And I used to actually do it with options as well. But I decided that. Because you could have the right trade if you're in an option, and overnight, whatever the earnings are, if the earnings are favorable, it could spiral to the upside. But by the time the market opens the next day, between a conference and everything, you could see an unbelievable gain just vanish to a loss when you were absolutely correct. So the way you're doing it, using the stock, I think is the best way. Now, this is the way I would do it, because you've already got a cushion. You've got at least for one of your positions, you've got a 50% cushion.
I've got 10,000 shares at each price, 925 and the higher price.
So what I'm going to recommend is this. And you think it through, because you might want to make a different choice. I would take the one with the greatest profit right now, and I'd say, okay, then I'm going to try to keep not all of it, but part of it as a core position into the close, because that's what you're intending to do. That's number one. Number two, the little trading range that it's been in over the last, I said little, it's actually a big percentage, but compared to where it's come from, it's 614. Right. This is really just a tiny range between 9 and 9, just over 9.
I remember that because I traded it at that. So, I, unlike a lot of other people that jumped in recently, I know that wasn't, 20 years ago. That was a month ago.
And normally, this is what you're saying is exactly true. You'd be looking at years for a stock to go from $6 to $9, a more than 50% gain in this case.
People need a little refresher on the way stocks. It used to be like a train track. It just went on and on and on. And
right. Well, some of them do. I can show stock. Here's a stock, STZ. Look at this. Talk about a train. STZ is just now becoming a bit toppy. Look at that monthly chart. It is unbelievable. This is Constellation Brands, spirits, beers, wines. Need I say more?
I mentioned X to you last week, and it was up in the air whether I was going to go into POT or X, and I went into POT, and I ended up cashing out of that at a small loss, and I should have gone into X.
Right. Okay. So now let's do this. X and Alco, you've done fabulously. This is what I'm going to say to you. I would not get too heavy on the long side into the close today, and I'll explain why. If Alcoa has a good result, and then there's a conference over the late afternoon or early evening, you're not sure where it's going to close. You are able to get out overnight, right? You can trade your Alcoa overnight.
Yeah, absolutely. And I really don't think that it will have a good earnings. And alluding to what you said earlier, in all my trading, which has been, about 7-8 years now, I don't think I don't think I've maybe 10% of the time ever made money, even when there was good earnings on something.
Yeah, but
For some
Alcoa
reason, earnings today, things drop down. You've heard it. It did.
Yeah.
It did great, but it was less than the street expected.
Right, but I
thing,
think it did in the last earnings. I think it did have a nice pop up. So this is what I'm going to say to you. I would start to take profits now. I think this market is actually going to close a lot lower than the highs of the day today.
I agree. It went up too fast. It just went too fast.
Right, and that was short covering a bunch of things. That's number one. Number two is this is really a good-looking stock. So I would prefer to see that you've got your core position, the 921 now. This is the part that I would hold overnight, say, you know what, if I give back, maybe I'm going to give back to the 40 cents that it's at 968 right now. Maybe it comes back to 920 or maybe even a little lower. But the weekly chart is saying, hey, this is a very nice stock. So that's number one. But I'm just going to suggest to you that you take some profits off. If you can have a trading stop of maybe 10 cents, I'd keep it real tight on your second position. Your second position, I would see if it can go at all later today to 675. I'd start whittling away as it moved up. And if it closes at the high of the day, I would exit your second trade. I'd keep that first trade. And I would even say to you, why not take some of your first trade off? Let's just say it spikes up great tomorrow and everything's good. That's just a real nice profit. But I can just tell you that if it's disappointing because of the H pattern that could go to an M, we might find that Alcoa actually goes underneath Friday's low of 935. That's really what I'm saying. So
I agree, but although I do expect a pop, I like the way you mentioned looking at things in the different baskets. A lot of traders don't do that. It's all in one basket. I look at it actually kind of like a brick and mortar type, something that's physical, and I put the circle around it with 10,000 at a certain price, and I look at that as like some sort of commodity sitting there, and I have those different baskets with different. That I own it. It's just like if you were in the car business. Every car is at a different price.
Okay, I love that. That's exactly the way to be thinking of this. Not only that, it allows you the comfort to say that's the level that I'm waiting for, and you just have to sit back.
And it also gives you that short-term endorphins because, okay, I'm going to sell this one car at this price. So when you put everything in that big basket.
You're going to get your endorphins tonight. Don't worry about that.
Yeah. But, it's just good to keep everything going. These people that buy and buy and buy, and then it's all they cost average in this one big box. It just never has worked for me.
Well, good luck, and we'll see what happens tonight. Good luck, and let me know.
Yeah,
Thanks,
thank
Scott.
you, Basil.
Thank you. Folks, we'll be back. Gaza 41.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Let me just explain what I was looking at and why I said when I got that email from Al, why I'm really quite satisfied with having a mixed portfolio, longs and shorts, and I'll explain why. This is the 6th bar from the match with the 311, the November 3rd high at 17,977. On Friday, when the market was up so strongly, I'm looking at this and I'm saying, well, that's it kind of matches a little bit of what we were expecting. And all of a sudden, there was that turnaround from the high of the day and started pulling back. It didn't close negative, but it did pull back very sharply. And now we're in this bar, and that bar said also that there was a rally and that it didn't close all that well. It closed actually under the 9 EMA. I don't see now whether or not we can close under the 9 EMA, which is at 17,632. That's another 60, more than 60 points from where we are. That would be way too much. But the pattern is matched, and I'm just showing this part of the Dow as it stands right now. We're right there. We made the high of 17,811 on April the 1st. That's right there where the down arrow is. I've just expanded this, so that means there. And there goes, that was Friday of last week. What day was that? Friday, the 4th. I'm sorry, it was the 4th at 17,806. And that was over there. That's the way it works. Good, got it. So here we are. So that's Friday. Last week goes Monday, Tuesday, Wednesday, Thursday, Friday, and now we've got a pretty big candle so far for today. But the MACD is still quite negative, but it is flattening out, but it's still negative with the green line, the 9-period differential, the fast-moving average, I call it that, much lower than the slow-moving average, the red one. And the stochastic is still turning down very sharply, all right? And the histogram right there shows you that it is still red and it's at minus 35%. So that says to me that there's a much greater chance that the market is starting to struggle. And that's not to say, as I was saying with, Scott was talking about endorphins. That's not to say that the market couldn't get its endorphins cooking and start to really push above the previous highs and try to get to that 17,811 area. But the way I'm looking at it right now is that, could you turn it red? Hello, Toga. Red. Turn what red? DAX getting weak. Oh, could I turn it red? Yeah, I could turn it red. Sell. That's the way to turn it red. Meantime, what we're looking, why does it say the Dow's up 121? Uh-oh. Wait a minute. What's going on here? That was Friday intraday. Settings, scaling, daily style. Give me this one more time. Hey, what's going on here? Now let's get out of this one. Here we go. Settings, 411. That's correct. Daily, all the way back. Got it. So what's going on here? Oh, there it is. Refreshing. Oh, that doesn't usually happen. All right, waiting. I don't want to go there. Let's go to this one then. Yeah. So on this particular one is a much greater detail. This is the one that I showed my subscribers over the weekend, last weekend. This is what we were looking at. And you see this candle right here turning down, right here. That's the candle. And I put a question mark. And it's the question was, I asked, are we here? That's the move where it was up and then pull back. So far, the pattern is exactly what we wanted to see. We're looking at the Dow following the script of both November the 3rd of last year, as well as May the 19th of last year, where it starts slowly to move down, and then it has sudden moves that take it below the 9-period moving average, and that 9-period moving average becomes a strong resistance, and still until there's a certain point where it gets to the stochastic, gets to a point where it's oversold, really oversold, and then bam, it gives a nice bounce to the upside. It comes almost all the way back. Look, 18,351 was the all-time high. You remember there was that move back in June the 23rd to be exact, where it went to 18,188. Not exactly within an eye blink, but pretty close to the 18,351. So all I can say is that these patterns are matching so well that all I can say is I think they could continue. I can only say I think they can continue. And that would say tomorrow is the day you've got to be careful, because tomorrow is the day that you could have that boom, that rather sharp move to the downside. So I'm just looking at patterns that match. That's all. All right. And close that out. And I want to go to the next chart. And the next chart is going to be very interesting. Why? Because we're looking at the volatility index, VIX.X. And that volatility index is holding the 9-period exponential moving average. I didn't show it over the weekend to my subscribers because it closed again under the 9 EMA. And we're waiting for a weekly close decisively over the weekly 9 EMA of 16.40. And it's way under. It's at 1560 right now. But look, it is walking the 9-period moving average. In the MACD is expanding. Wait, what is the volatility index? You can go through every reading you want. I make it just as simple as I can. For me, the volatility index for 20 years now has just represented buying pressure and selling pressure. You can talk about ratios, you can talk about the options, you can talk about the futures, you can talk about the near strike, far strike. I don't care what you talk about. For me, it's only about numbers. And once the VIX starts to go into the 16s and holds on a closing basis on the daily, you're looking at something completely different. You're looking at the volatility, meaning the declines in the Dow, making lower highs and lower lows. And I'm making it simple. You go back under 15, this market is going to retest the recent highs real quickly. So that's the way I look at it. And for the volatility index on the daily basis, I have to wait for the close. We've seen what's happened within the last 5 minutes, within the last 1 minute of the close. They've been wanting to beat down the VIX index almost every day. Look at those close. Look at that. Bam, bam, bam. So I need the proof of the pudding. The proof of the pudding for me is at 1557. Hey, that's okay for the positions we have. I want to see a push above that high right there, 1593. That'll say, great, now we can start heading for the 16s. Okay, because the weekly chart is just, look, the MACD stochastic all says, ho-hum, nothing to see here, folks. Nothing to see until we start trading in the high 16s. Okay, enough with that. Then I had a question. Question was, Basil? Yeah, it is. It's wild how the Dow Jones Industrial Average pattern and the chap wave counts are identical. What do I mean by that? Look at this. 50 days. It's 50 days, half September. Right. 50 days. This is the buy mode match. 50 bars goes from the August, let me go back to the August low. August 24th low. We go down to 15,370. And then it starts to move up. That move takes 50 sessions before it makes the 6th highest peak in the Chapman wave. peak F, or the 6th highest peak. We could put a 6 if you want, or an F, doesn't matter. It's the same Chapman wave principle. And at 17,977 on November the 3rd, it starts this little sideways move to the downside, but it doesn't break down until bar 1, 2, 3, 4, 5, 6. Oh, it's bar 7. So bar 7, and we are right here. And this is exactly what happened at peak F, 50 days match right there on November the 3rd. Going to the, I'll talk about it when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Just to finish the pattern match, there was this pattern match from May of last year, which started a series of lower lows, and there's that pink straight line. That's called a trend line. When you get two trend lines and they're parallel, it's called a channel. And that became a channel that gave tremendous support as the Dow closed under the 200-period moving average, this coral-colored line. And then what happened was, boom, that was in late August. That was on the 19th. The market, the Dow held the 9-period moving average, and on the 20th, kaplop, it went zipping down. And if you remember, it was, I think, August the 22nd of 1987 that you started the down move there. That was a 6-week collapse, right? So in this particular instance, it goes straight down to the 24th of August, and then it goes 50 days up. Now, look what happened. The on-balance volume, the blue line, went to a peak A, B, C, D, and then it started to fail. There was a divergence there, and the stochastic was lower and lower and lower. So now let's go to where we are today. And today you can see there, well, first of all, there was that match in November. It goes sideways, sideways, sideways within a channel, beautiful channel, and then boom, on the January the 6th, it breaks that and it just goes straight down after that. So the matches have been absolutely fantastic. So I have to go with this concept right now. Why not say that there's a match until there's not a match? That's all. Real simple, because the psychology is the same. So now look what's happened. You've got a down match, and you've got the on-balance volume starting to make lower lows. And it's gone to peak A, B, C, D, E, matching the E, and the F was a little lower. So it was a divergence. So all I can say is matches are matches, and we'll see if this is day 1, 2, 3, 4, 5, 6, and here's your day 6, 1, 2, 3, 4, 5, 5. 1, 2, 3, 4, 5, 6, and that was 1, 2, 3, 4, 5, 6. There's 6, right there. Okay? And now what we're looking at, that was for Friday, and this is for Monday. So Tuesday is the day to watch out for. It doesn't have to match. Does it have to be have to be a big ugly day? I don't know. I'm just saying I'm preparing that. I think that you've got to imagine that the parallels will continue until they don't. So we'll see. So now let's run a couple of things. Over the weekend, I spent quite some time on many, many charts. Let me show. First of all, thank you to all of those. So many people emailed me the fact that Burj Dubai, there's going to be another skyscraper in Dubai that's even taller than the Burj Khalifa, and that's going to be a tower, and it's going to be just a little taller. Can you believe it? The race is on. Here in Boston, the race is on. So let's just go through this real quickly. I wanted to show you in Investors Business Daily. Remember I spoke about that concrete company? I mentioned it to my subscribers. Look at this. It goes to a peak D at 63.67. USCR is a symbol, down 170, has 60.80 US concrete ink. And it makes a double top, a triple top, and then kaboom. I didn't know that, of course, when I picked it up. I just wanted to show that it was getting vulnerable. Well, you can see why it's getting vulnerable. Let me show you something else. The next one on the list. That's CoreSite Realty Core, COR. Fabulous looking chart. And then it gets to a D, and now it's stalling. It's still a C in the weekly chart. E, look at that move in the monthly. COR up at 70.79, up 4 cents today, starting to stall a little bit. Let's go to the next one. Tree, you remember Lending Tree? We spoke about this a long time ago. It's gone to a peak C. Could be an alternate account, but I'm calling it a C for now. Pulling back, it's starting to struggle at resistance. It's under the 9 EMA. So you can go through all of these, Facebook, all of these leading stocks in Investors Business Day. Look at that, down 1 at 109.54. Got a call the other day about Twitter, and I said, I don't think so. I think Twitter's going to struggle, and there it is struggling. So this is a very mixed market. That's what I want to say. I gave you the parameters before. Check out my opening call. I think you'll find it fascinating and very informative and hopefully lucrative. Folks, I'll be back tomorrow. Have a great day. And don't forget, there's a special going on right now at TFNN.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.